Hi, I'm Michael Yardney. Lately, the economic news has been changing, hasn't it? There's lots of talk about the next property boom, and property's back in favour. Once again, it's the favourite topic at dinner tables and at barbecues. Now, last week at one of my seminars, an attendee came up to me during the break and said, "Look, Michael, I hear what you're saying about how we've entered a new property cycle and that we're getting set for the next property wave, but..." And then he went on and cited the name of a number of economists who'd had the opposite opinion. One said that property values were going to drop 30%, another suggested property prices won't increase for another 10 years, and then the International Monetary Fund still suggests our property values are maybe 15% or so overvalued. So who's right? Those who suggest property values will once again boom, or those that say that property prices will stagnate or fall? Now, obviously, I'm on the side of those who suggest we're entering a new property cycle and that values will increase significantly over the next few years. But I'm not saying that based on hope or prayers. I'm suggesting this based on research and property fundamentals. Now, these are the same fundamentals that made me almost a lone voice earlier this year when everyone else was talking doom and gloom. Remember, I was explaining how we were getting set for the next property cycle. I suggested that we were in what I called a perfect storm, a confluence of a whole number of factors that when combined would set the stage for the next property boom. Now, all we were waiting for was consumer confidence. And since then, confidence has returned, and the price of properties I was suggesting buying at that time have in many cases gone up 10, 15%. Now, in general, you'll find that the economists who are suggesting real estate values are currently overpriced, they're not property people. They're, I guess, what I'd call share people. And they evaluate property like other commodities. And it really doesn't work that way in Australia. Yeah, but Michael, what about affordability, I guess you're asking? How will people ever be able to afford houses when property values just keep doubling every 7 to 10 years, like you say? Well, my answer to you is property has always been unaffordable. To some, and will only become more so as our capital cities mature. When my parents bought their first home, property values were unaffordable and they took out a 30-year loan to repay a $12,000 home loan. When I bought my first home, $18,000 seemed an almost unattainable price. In every generation, most first homeowners have had difficulty buying capital city properties, but established homeowners haven't found property values unaffordable. Otherwise they wouldn't be paying so much for properties, would they? Now think about it. 70% of Australians own their own home, and half of these have got no debt at all against their homes. So as the value of properties keeps increasing, their equity in their homes also keeps increasing. And as the value of their homes double every 7 to 10 years or so, many Australian families use this equity to upgrade their accommodation. They look to move to new houses, or maybe they just renovate or refurbish their homes. Rising property values are not a problem to them. Yes, it's a case of the rich getting richer. Something I clearly explain in my new book, Thriving, Not Just Surviving in Changing Times, in which I outline the golden rules of money for the new financial era. You've got your own copy, haven't you? Maybe, if not, click on the link down below and get your own copy. So why do property values keep rising? Sure, one part of it's inflation. The cost of everything goes up as the value of our dollar goes down. But there's much more to it than that. Property values in our capital cities have risen much, much more than the rate of inflation. It's because, by and large, we all want the same type of property and there's a limited supply. Around 21.5 million people currently live in Australia, and our permanent population is expected to increase by 330,000 people a year for the foreseeable future. Now today, 7 out of 10 people live in or immediately around our capital cities, and this trend is expected to increase. In the coming years, probably 80% of our projected population growth over the next 5 years are likely to move into either our capital cities or a few major regional areas. Our population is projected to grow by around 1.6 million or 8% within the next 5 years alone. Within 20 years, Australia's population is expected to reach 28 million people. Most of this growth is anticipated to continue taking place in or around our capital cities. My question to you is, where are we going to put them? And it's this supply and demand equation that will underpin our property values. There'll always be affordable properties around. There always have been. You can buy a cheap property today in many regional parts of Australia. These properties are cheap because no one wants to live there. We all want to live where everyone else wants to live, and we won't all be able to afford to buy a property in our capital cities. Have you noticed that when people can't afford to buy a property in the particular area they want to live in, while some will move to cheaper areas further out, many are happy to rent in their preferred areas. So property values will keep increasing in selected areas, and so will rentals. Yes, the rich will keep getting richer. Fortunately, in Australia, almost everybody has the opportunity to become wealthy through property. The problem is most property investors never develop the financial freedom they deserve because they just don't get it right. Now, to be honest, I haven't always got it right. Boy, have I made my share of mistakes in both my business life and my personal life. But fortunately, I seem to have got it right with property for the last couple of decades. And I'm prepared to share with you my thoughts on what's going to happen in the property markets at my upcoming Roadmap to Recovery seminars. Now, so far they've been a huge success, but there's 2 more to go, one in Perth and one in Melbourne. To find out more about these seminars and the more than $200 worth of bonuses we have waiting for attendees, please click on the link below and reserve your place. Now, over the last couple of weeks, I've been preparing for my annual Real World Real Estate Workshop. And this is Australia's longest running advanced 3-day property workshop. It's long been regarded as Australia's premier property training. So if you're an experienced investor or a well-read beginner, and in particular if you're considering getting involved in property renovations or development, please check out the details by clicking the link below and join us at my Real World Real Estate Workshop in October 23rd to 25th. Now, I've lined up one of the best faculties of property, tax, legal, finance and property development experts ever assembled in Australia, and you'll have access to them one-on-one, as most are staying for the whole 3 days to answer your personal questions. Now, by the way, in changing times like we're experiencing, as the market's changing, no one can help you quite like the independent property investment strategists at Metropole. I just want to remind you, of course, that we have no properties for sale, but we have access to every property on the market. So if you want to find out a bit more about what's happening in your local market and what our research suggests is in store for us, join us at a free property briefing in our offices in Melbourne, Sydney and Brisbane. Just click on the link below to find out more. Now, obviously my full-day seminar and in particular the 3-day workshops give you much more information than the couple of hour briefings that we have, but they're a great place to start and they're free, so please click on the link below and join us at our offices. Look forward to giving you another property update in 2 weeks' time.